When does ATED apply? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. When does ATED apply? So ATED is the annual tax on envelope dwellings. So this means if you've got a property that you own within a limited company wrapper, that ATED may apply. You think, but I've got loads of properties in a company. When does it apply to me? Well, ATED is all about higher value properties that are owned within a company. So the key thing we need to start with is what is a dwelling? And the dwelling is arguably a house or a residential property. So this could be a house, a HMO, a mixed use property where there is a residential element to the property, and it's any of these sorts of properties where they have a higher value. Now, the point that the higher value kicks in is when it goes over 500,000. So you need to be over 500,000 in valuation to be within the ATED regime. Now, the key thing here is when you are in the regime, you are in the regime. You cannot say, oh, but I've got an exception, I've got an exemption, and check out the video on the exemptions that do apply for ATED. But even if you've got an exemption, you don't maybe have any tax paid, you still need to do a return and claim that exemption. So if you do have any properties that are valued at that, whether it be a single dwelling or whether it be a HMO that is valued at that, then you need to be aware of ATED and you need to be aware of what you need to be submitting. This may mean that the valuation is really the important factor. So you do need to be careful and go, oh, well, my property's valued at 495,000, therefore it's under. And I'd just say, please do take care with those sorts of valuations, especially where you may have them that are very close to that limit. Because if you are close to that limit, then there may be this question that, well, what is the valuation of that property? And you may need to just have the evidence. So if it is below, that it's definitely below, because otherwise you may have problems and you may be brought in later. And if you're brought in later and you're late, then there will be penalties. And these are quite indiscriminate penalties that they just apply. And unfortunately, it's very difficult to remove those penalties. A key element of the ATED tax, to simplify it, is that they have different bandings for the different taxes on the ATED tax charges, but this also means that it keeps things within ranges. Because of this, they have valuation dates, and every 5 years is a valuation period or a valuation year. So at each valuation year, you need to assess whether your properties are over that value, and if they're over that value, then you come into the regime. So the next valuation date isn't until 2027. So if you maybe have a HMO that's worth 460,000 that you think, oh, it's well under, not an issue, but that was 2-3 years ago, and we're getting towards 2027 now, and your rents have gone up and the commercial valuation may have gone up, you can now find that that property is worth 510,000. And all of a sudden, you are now in the ATED regime in 2027, and you would need to do an ATED tax return, but claim that you've got an exemption because it's a let property. It's not just sitting in a company doing nothing as an envelope dwellings, as the name of the tax is shown. It's to help with those properties that do just sit in companies and don't do anything. So you're not going to have any tax to pay, but you do have a return to do. And if you don't do that return, then there are penalties that apply. So as you can see, it's one where you just need to take a little bit of care, keep track of how much your properties are worth, so that in effect, if your property is bought, refurbished, gets to the new higher value, you don't have to do anything immediately. But if your new value is over the limit, the 500,000, when it comes to the revaluation year, you will then be in it. So buying a property, refurbing it up to a high valuation is not an issue. You are not going to be caught with ATED straight away. When you get to the revaluation date in 2027, then you'd look at the value of your properties, and if it's over that 500,000 because you've done a 7-8 bed HMO, it's worth 525 for example, you would then be brought into the ATED regime and you would need to do your 2027 tax return, even if it shows that there's an exemption and the tax is 0. So it's in some ways a bit of a warning, this video. It's just to make you aware of the impact, because as property values go up, it will have an impact on more and more property investors. And we don't want anyone paying a penalty when they don't need to. The limits have not changed in quite a long time, which means that 500,000 as property values increase, that will catch more people into the web of ATED. And they may not get any extra tax, but if you're not doing a return when you should be, they obviously can come after you for penalties, which is not good for you, but it does collect additional taxes for them. So it is in their interest to be getting you to do a return, because if you don't, they are collecting penalties that they can put towards the rest of the HMRC budget. As you can see, ATED is a little bit of a quirky one, but hopefully if you know what you need to keep an eye out for, you will know when you may have to apply ATED and you will be on the ball so that you know what you need to do. Key thing is your 500,000 value on a property, and then the second thing is if you've bought it and done it up, then you need to be aware of the next valuation date, which is 2027 in April, March-April time. If you have bought a property today and it is worth that value, then you'll be caught straight away in the regime and you'll need to be doing something in the next reporting period, which is always April each tax or each year. Good luck with your ATED reporting and just stay aware so that you don't find that you get caught out. Hopefully today you've discovered when ATED will apply to your limited company. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel, and let's make tax less taxing.